Hello everyone, welcome to Oliveboard. My name is Dinkar and I welcome you all in this session. Sorry for a minute of delay just because some technical things I have issue with technical things. Sorry for that and I welcome you again in this session. I hope everybody is doing great and fine and I hope everybody is following all the COVID-19 protocols properly. And so, as you all know that today is Monday, and at 6 p.m. we always discuss regarding the basics of economy. And we have continued this series since 14 lecture around 2.5 months. We It's already over regarding this series, and it is going on successfully just because of all of your support. And thank you for all the support that you has given to me. And today again we have one important concept related to microfinancing. So today we are going to discuss regarding the microfinance. Okay, so let me see how many people are there, then we can start our session right away. Okay, so hello Lalit, welcome to the session. Good to see you over here. Always a regular student of mine. Thank you so much for so much of support. Great to see you every time in the series. So guys, this is about microfinance we are going to discuss today. See, we are in this series, we are not discussing any typical type of like very detailed knowledge things about the topic. No, we are not doing that. We are just discussing on the top what is this, what is the importance of this, any criticism regarding this, or how this thing is improving the lives of the people and all together. So we are just discussing only those things. Okay, so since this is a very basic series, so we have to keep it in such a way that so that people remain they should have a proper understanding regarding this thing. Okay, so first of all, let me start with our introduction today. And first of all, you should know that what is microfinancing. As the word suggests, microfinancing is also called as microcredit. Okay, so normally it is a type of banking service provided to unemployed or the low income individual or a group or otherwise who have no other means to access the financial service. As you all know that in India we have lots of various financial services are there. You may be a bank, we have various other things are there. Okay, but normally these banks are not available to each and every person throughout the country, because for a bank, in order to go to a bank and operate a bank account, you should require basic things. You should have some source of income, some things to deposit over there. But many people in our country are very poor who do not do all these things. Okay, so that is why this system of microcredit has been started, that is called microfinance. Okay, so normally it is for unemployed, low income people, poor people. Okay, those who have no other means for accessing the financial services. Okay, normally this microfinancings work majorly in the rural and suburban areas and rural urban areas, like that. Okay, so microfinance allows people to take on reasonable small business loans safely and in a manner that is consistent with ethical lending, that is consistent with ethical lending practices. Okay, it is not like that you are taking a loan from a person who is known to you, but he is charging the way whatever interest he wanted to charge. Okay, if you take loan from me, I will charge you 20, 30, 40, or sometimes 100% of the interest. No, not like this. There should be ethical lending practices, should be there. Ethics has to be followed in a proper way. The majority of microfinancing operations occurs in developing countries. Yes, normally all these microfinancing operation normally works in the developing countries like Indonesia, India, China, etc. Because there are huge number of population which is still away from the normal financial service of the country. So that is why these microfinancing is working in order to get all the people together into the financial service, so that everybody should have a support regarding the financial services. Okay, so it is provided to marginalized people and offer small loans, that is also called micro loans, to alleviate the poverty. So if you are providing someone with a micro loans, so they might be using for their home purposes, they might be using to open some of the small enterprises or small type of work they wanted to open it, right? So it will help in elevate the poverty also in the rural areas through financial inclusion. So if by providing the micro loans, we are doing financial inclusion over there, okay? And it also provides money for entrepreneurship, and mainly it empowers the woman, because even when you go to the village area, women are more getting these type of loan regarding from the microfinances, because the credibility of woman over there is taken as a supreme part, because women forms the various groups and they take the loan as a group. Okay, we will be discussing that in the few other slides. Before going further, I must ask you, if you are finding any issues regarding the topic or any questions are there, please just write it on the chat box. I will simply answer that. Okay, so don't hesitate to ask your question. Okay, so I have already mentioned you this thing to you. Okay, now genesis of microfinancing, from where this whole concept of microfinancing came. Okay, normally it goes beyond like 1800s, and then the second world war came, then Marshall Plan came. Okay, so all these have some kind of small concept of micro financing over there. But right now the current structure which we are using is that has started in 1970s. Normally the first thing that has been started regarding the microfinance is done by the Grameen Bank of Bangladesh, and from there everything related to microfinance goes up. Okay, so Shore Bank, this is the first microfinance and the community-based development bank in 1974, that is based on Chicago. And in 2005, International Year of Microcredit has been declared. Okay, 2005 year has been declared as a year of microcredit by the Economic and Social Council of United Nations. Now, how this microfinance came into being? Okay, so it is not a new concept. First of all, it was discussed, the micro lending has been started from Irish loan fund system. It has been introduced by Jonathan Swift, which sought to improve the condition of the impoverished Irish citizen. Normally the Irish citizen were in great poverty over there. So the person that has a name, Jonathan Swift, was a person name. He has started a concept of micro lending, and that was first occurred in Irish loan fund system. And the first organization who received the attention was the Grameen Bank. It was the first organization who received the attention regarding the micro credit or microfinance was the Grameen Bank. It started in 1983 by the Muhammad Yunus in Bangladesh. Okay, his name is very important in the field of microfinance, so you must know this name. Whenever it comes, you should know this name. Okay, so in addition to provide the loans to its clients, the Grameen Bank also suggests that its customers subscribe to its 16 decision. So whenever this Grameen Bank provided loan to its client, they asked all their clients to subscribe to their 16 decision list. 16 decision list which they have to follow. That is a basic list of way that a poor can improve their life. So they provide the loan also, and they provide a list that has to be followed by a poor, so that they can improve their lives. Okay, so this 16 decision touch upon a wide variety of subjects, ranging from the request to stop the practice of issuing dowries, upon the couple marriage, to keep drinking water sanity. So basics regarding basics of practices like clean drinking water, do not go for any kind of social evil work, and all those things. So all this comes under the 16 decision that they have to made, and at the same time you can have avail the loans. Okay, so the big thing happened in 2006. The Nobel Peace Prize was awarded to both Muhammad Yunus and Grameen Bank of their Bangladesh in the effort of developing the microfinance system throughout the country. Okay, so this is a very important thing. So you should know about the Muhammad Yunus over here. Okay, and sometimes the question may come like, what is the 16 decision list relates to? The question can be, what is the 16 decision list relates to? So you should know that it relates to micro financing. Okay, And you should also know that the Nobel Peace Prize of 2006 has gone to both UNIS and Grameen Bank for their effort to develop the microfinance. So here if you can see that the person is Muhammad Yunus, holding a Alfred Nobel Peace Prize for developing this concept of microfinance. Now, just a sec. Okay. Now, so what is this Grameen Bank model is all about? We have discussed like Grameen Bank over there. So what is this Grameen Bank model is all about? So it is also called as your rural bank. It is also called as rural bank, and it is based on the idea that poor people have many untapped skills. That means the poor people who are living in the rural areas, they have various type of skill which we are not able to utilize it properly. That means they are underutilized. We are not able to utilize them properly because they have a lack of credit. That means they don't have money in order to show their skills, to utilize their skills. Okay, so this was the concept that has been taken. That is, poor has an untapped skill. That means they are hugely skills, but they are not able to utilize that skill because they do not have credits, right? So the bank uses group-based credit approach. Group-based credit approach system based on agreed terms and conditions. So here there will be a group of maybe 10, 20, 30, whatever people it is. They provide loans to various peoples, and this utilizes a system of peer pressure system. That means if someone is not providing the proper loan amount at proper time, that means they are not repaying the loan on a proper time, so there will be a peer pressure that will be developed on that person to pay the loan. Okay, so it is like a peer pressure system. Like if I, me, you and everybody becomes the part of that group, so if you are not paying the loan from of your side, so I will say that, oh, you have not paid your loan till now, please go and pay that. So I am creating a pressure in your mind. Okay, so this whole concept of Grameen model works on the peer pressure system. Okay, then comes our self-help group and joint liability group. What is this self-help group? It is the most important. Mostly this self-help group is mostly for the women. Normally they forms under the group of 10 to 20 women. Okay, so what we wanted to develop there over is to develop sharing and credit discipline. Here we are developing a share the credit and proper credit discipline. That means at a proper time, if you have taken the loan of 10,000, so you should repay that loan on a proper time within a disciplined way. Okay, very disciplined way you have to pay that loan. Okay, so formally it was linked to a bank for opening a bank account to access the loan. So normally this group has to open a bank account, and based on that bank account all these transactions used to take place. That is called self-help group. Okay, that is called self-help group model. Okay, then what exactly we wanted to have with this model is to build the credit history. That means if one group is there, we will check regarding this group at what time this group has taken the loan, in how much time they have paid back their loan, again at what time they have taken the loan. So based on their credit history, as you all know that right now credit cards, they have their ratings. Okay, like if you have a rating below this, so you will not get the personal loan. If you have a rating above this, you will get a personal loan, like that. Okay, so here they are building the credit history of that group, so that we can check it on whether this group is providing the proper loan amount, proper repayment of the loan at a proper time or not, and how much they are taking loan, at what time they are repaying it. So credit history we are developing for these groups. Okay, and each individual should have a bank account over there. Okay, but some issues were there, like issues like no margin build on plan to take case of cost of building, managing and scaling the program. So new model has to be achieved. So we have to create a new model because of some of the issues related to the self-help group model. Okay, so that new model was called as JLG, that is called Joint Liability Group. Joint Liability Group, that is an alternative to SLG, self-help group. Okay, self-help group, SHG. Okay, so what is this joint liability group? Not linked to bank, but is intermediated by a loan officer. So there will be a loan officer of a microfinancial institution who is responsible for formation and management of the group. So there will be an intermediate person, that is called loan officer, who will be responsible. They will create the group and manage the group. And here in the joint liability group model is given to an individual, usually by a MFI backed by a group guarantee. So if any person of that group defaulted on their loan, so it is being guaranteed by the group. So here microfinance institution will get their money from the group if anybody defaulted on their loan. So this is the more secure way of doing the transaction, loan transaction between a group. Okay, earlier we were using a peer pressure, but here we are taking group as a guarantee. That means group is taking a guarantee of that person. Okay, so here group has taken the guarantee of each and every person. If anybody defaulted on that, so the group will be providing that money to the bank. Okay, so it is like a win-win situation for all people, microfinancial institution also, and even the group also, right? So what are the various type of microfinancial channels are there? So self-help group bank linkages program is there. Okay, this channel was initiated by Nabard in 1992. Normally it encourages the financially backward women to come together to put a group of 10 to 15 people. Okay, they contribute their individual saving to that group in a regular interval, and loan are provided to member of the group from these contribution. That means each and every members contribute some amount to each other, and based on this contribution, if anybody needed some loan, from these contribution the loans will be provided to that person. Okay, self-help group are also offered bank loan at the later stage, and these loan can be used for funding income generating activities. Okay, so this model has a lot of success in the past years, and it also gained a lot of popularity for contributing to the growth empowerment of the women. Mainly it has empowered, huge empowerment has been done to the women by this model. It's like a self-sustainable model, if you can say like that, self-sustainable model, and it is also supported by our Nabard, SEBI and various NGOs. Okay, so microfinance institution, these are the institution have a microfinance at their primary operation. So first is the channel is the self-help group bank linkages program, and second one is our microfinance institution. So these are the institution who are only giving loans for microfinance, or the microfinance is their primary operation. They are not dependent on any big type of operation. So these are microfinance institution, and they generally focus on primary operation only. Okay, so these lend through a concept of joint liability group, JLG, that we have discussed earlier. JLG, this one, JLG system. Okay, that is an informal group that consists of 5 to 10 members who seek loan either jointly or individually, and the guarantee of paying the loan is dependent on the group. Okay, it is a group guarantee program. Okay, so but some issues are there regarding this in India. Normally it is having a sensitive client base. Normally what happens is as you go to the rural areas, the people over there are not that much sensitive regarding how the way they are taking the loan and how to repay back it. So giving loan to those people is a very sensitive thing. That means you are giving to the loan to a person who has not given any type of collateral to you. Okay, they have not given any type of guarantee to you. So there is a sensitive client base. That means total a rural area where you don't know whether they will honor their commitment or not. So we don't know about that. Okay. Then the second one is striking the right balance. So we have to strike the right balance between their commercial interest. That means providing the loans giving importance to the people are getting satisfied, people are properly utilizing the loan, and at the same time bank is also have a commercial interest, because banks do not work for free. Okay, they also wanted some kind of interest. Okay, so we have to strike a balance between the giving of the loan, commercial interest, and poverty function and everything. Okay, so this is the important issue of Andhra Pradesh, which has taken place earlier regarding the microfinance. In the history of microfinance, there was a crisis that has happened in Andhra Pradesh, and it was a huge crisis. Because of that, everywhere we have to change the rules regarding the microfinance, and everything has to be done. Okay, because in the Andhra Pradesh, there was very big self-help groups, Grameen banks, joint liability groups, and the four largest microfinance institutions are there, because there was a huge success in the Andhra Pradesh at that time. Okay, but slowly what happens is that the complaints regarding the loans have coming. There was a repayment issue. Repayment issue has come. Then bad news spread regarding the microfinance institution, that some are doing the illegal activities regarding this microfinancing. Okay, microfinance are charging huge interest rate. They have started charging huge interest rate in Andhra Pradesh. Sometimes they are doing 100% collection. The microfinance institution are doing 100% collection of loan. 100% collection of loan means by any means. That means by giving any kind of, like, they are taking the things from the homes of the people, like you have not paid the loan, we are taking your home, we are taking these utensils from your home, by making providing them with the threats, to the people, that if you don't provide me the loan, I will do this to you, I will do that to you. So there was a threat also given by the microfinancial institution companies over there. Okay, so more loan has been given to a person than the person capacity to repay. Okay, more loan has been given to the person than the person capacity to repay back. That is why the default is happening, because you are giving the person 10,000 rupees, 20,000 rupees as a loan, but his capacity is only 5,000 to repay. Still you are giving more to them people. Okay, then slowly staff people have started doing frauds. So there was a huge write-off has to be done of the loan. That means the banks, microfinancial institution have lost a lot of their money. So in the wake of all these things, Andhra Pradesh government has come up with a ordinance to stop all microfinancial institution of the state. Okay, all microfinancial institution has been stopped with the ordinance, right, because of all these issues that are coming. Okay, then there was a committee that has been set up under the Maligam in the wake of Andhra Pradesh crisis. So he said regulations are need to be put up. The report contains suggestion to regulate the microfinancial sector. Proper pricing of the interest has to be done. Transparency has to be increased. Reducing the problems of multi-lending and over-borrowing has to be stopped. Slowly, RBI also came into being. RBI regulation started. Okay. Then also we have our code of conduct has been started over there. Then self regulatory organization also came regarding the microfinancial institution. Earlier, microfinancial institutions are not under that much of regulation, but after that crisis of Andhra Pradesh crisis, what happens? They have started regulating, RBI started regulating code of conduct, and your self-regulatory organization came into being. Okay. Now, what is the scope of these microfinancial institutions? What are the scope of microfinancial institutions? First of all is, like conventional leaders, microfinanciers charge interest on the loan and institute specific repayment plans. So, microfinanciers charge interest on loan and institute specific repayment plan. So they can do some specific repayment plan. So microfinanciers can have a tie-up with various type of peoples or institution, and they can develop a type of their repayment plans. Okay, the World Bank estimate that more than 500 million people have benefited from the microfinance related operation. We see, whenever we start working on any things, there will be a positive impact also, there will be a negative impact also, and there will be a huge scope also regarding that. Okay, so the World Bank has estimated that 500 million people have already benefited from the microfinance related operations. Okay, so traditional why this microfinancial institution we wanted to keep is just because traditional banking sector cannot reach the millions of the poor people for whom a small amount of loan is also that create a huge kind of difference in their life. Okay, as you all know that most of the poor people are living in a rural area, and they are very dispersed. They are living here and there, and they don't know about how they wanted to spend the life and what type of work they wanted to do. They do not know anything about the loans that the government is given, how they can change their life by taking the loans, and they can start working on something which they are good at, right? So even administrative cost of supplying loans to the poor population is extremely high. And normally poor peoples do not have any access to use of as a collateral. So that is why poor people do not have a collaterals. Administrative cost of supplying the traditional banking services is very high. That is why we wanted microfinancial institution to go into these areas. Okay, so traditional banking cannot reach there. Traditional banking has a huge administrative cost. Traditional banking normally asks for collateral. So that is why microfinancial institution has to come into place, where they normally do not require any kind of collateral. Normally you give a loan to a group or a group based activity or like that, or any entrepreneurship activity, the loan you provide in that way. Okay, now here how microfinancing can help. Microfinance allow people to take on reasonable small business loan safely in a manner that is consistent with ethical lending practices. Many microfinance institutions focus on helping the women. Okay, so with microfinancing you can have you can start your business with a reasonable small business. You can get a loan properly, safely, and at the same time you have a ethical lending practices, because you are getting from a microfinancing institution. They are providing in an ethical way, and mainly they are focusing on helping of the women, right? Now, what are the types of microfinance that has been provided? That means what are the type of products that are there? Okay, first of all, we provide micro loans that we have already studied regarding the micro loans, right? Micro loans, these are the loans are significant as they are provided to the borrowers with no collaterals. The end result of the micro loan should be to have a recipient outgrow a smaller loan and ready for traditional banking loan. That means we are providing a loan to a person with no collateral, and slowly they can develop into a person who can take smaller loans from the traditional bank loans. so that we wanted to improve the life of a people in a rural area or a poor people, so that with that small loan that we have provided with no collateral, they should start some kind of work, group activity, entrepreneurship activity, so that slowly they come into the mainstream of traditional banking loans. Then we have a micro saving. Micro saving accounts allow entrepreneurs operate saving account with no minimum balances. These accounts help user inculcate the financial discipline and develop an interest in saving for the future. Okay, so here we are doing some kind of micro saving which will help in entrepreneurship activities. It will also help in developing the financial discipline among themselves. Okay, and at the time when they really want that money, they will have a huge sum of money in order to start work. Then we have a micro insurance. So micro insurance is a type of coverage provided to the borrowers of the micro loan. These insurance plans have a very low premium than traditional insurance policy. That means micro insurance is a policy where whatever loan you have taken, on that insurance has been given. Like if you are not able to pay, the insurance company will pay. But here the cost of premium will be very low. The cost of premium will be very low, so that with a small premium you have secured your loan. That means if you are free from your mind that I have to pay the loan. If you are well versed with the loan, if you wanted to pay the loan amount, you can give it. But by chance if something happens to you, or if your business fails, or if anything happens, so then the insurance company will pay back your loan back to the microfinance institution. So these are the type of microfinances that you get it. Okay, micro loans, micro saving, micro insurance, right? So what is the importance of microfinance over here? Almost half of the population of our country does not have a basic saving account. Right now they have opened that Jan Dhan account. It is only on the wake of our 2016 demonetization. Because of that, everybody has to open the Jan Dhan account. Because of Jan Dhan account, now people are able to utilize the financial service in a proper way. Okay, so this segment requires financial service so that aspirations such as building of asset, protection against the risk can be fulfilled. Normally people keep cashes in their homes, gold in their homes, so people have to be aligned with the national traditional banking system of our country. Microfinance provide access to capital for individuals who are financially underserved. That means it provided access to capital. Capital means someone who wanted to start some kind of business, some kind of entrepreneurship activity like that. Okay, so if microfinance institution were not offering loans to this segment of the society, these group would have resorted to borrowing money from friends or the family members. The probability of them opting for the fast cash loan or payday advances and the interest rate are also higher. That means if the microfinancial institutions are not providing loans to the people at a proper interest rate, then the person who are in really need of money, they have to either borrow from the money lenders, or they have to buy to get the money from the family member or your friend. They will charge huge interest rate over that. Okay, the microfinance helps these group invest wisely in their business, and hence it is an alignment with the government vision of financial inclusion. So this microfinances helps in the financial inclusion of our country, which is the main part which government wanted to achieve. That means each and every corner of our country should have a proper financial service throughout the country. Wherever you go, there should be no issue regarding the financial services. Everywhere it should be there, right? That is the importance of microfinance. Then what are the key features of microfinance? Key features. So some of the significant features of microfinances are there. So normally the people who they are the borrowers who are normally from a low income background. Obviously they will be poor people, they will be living in the rural areas, they do not have the proper collaterals and all those things. Okay, so loan amount will be a very small amount or a micro loans, and the loan tenure is also very short loan tenure is there. Microfinance loans do not require any collateral. That means you do not have to provide any kind of guarantee or collateral to these people's micro. So these loans are usually paid at higher frequencies. That means whenever you get money, you just repay it back like that. Okay. The purpose of the most microfinance loan is to income generation. Yes, obviously everybody wanted to generate income. Even microfinance company wanted to generate income. The person who is taking the loan also wanted to generate income by doing some kind of activity. So everywhere income is the main criteria. People wanted to increase their income. See, if person is opening a bank, that means they are opening for a profit, not for social service, right? With opening of a bank, they can do some kind of social service by providing them with basic important facilities at a very reduced rate, but everybody wants profit, income generation in their work, right? Now, role of microfinance institution. Microfinance serve as an offered for following sources: formal institution, semi-formal institution, informal sources such as shopkeepers and small scale lenders. Okay, so normally microfinance service are offered by the following sources: formal institution, cooperatives, rural banks; semi-formal like NGOs; informal sources like small shopkeepers. If you go to a shopkeeper, they will right now they might have a electronic equipment. They will take the money from you and provide they can provide money to you at some kind of interest and all those things. Then institutional microfinances encompasses the service provided by both formal and semi-formal institution. And the microfinance institutions providing services to banking services to the low income individual group, and which is a very effective tool for reducing the poverty in India. Very important and effective tool in reducing the poverty in India. And as we all know that while several MFIs are run with great historical record, others are operationally self-sufficient. Now, types of microfinance institution: they can be your commercial bank, credit unions, NGOs, sectoral or government banks, and cooperatives. Even you can have a small shopkeepers also providing them. Okay, so microfinance institution act as a supplement to service offered by the bank. That means they just supplement the service. Whatever the bank are not providing in the rural area, microfinance institution are providing that in the rural area. Okay. Apart from offering the microcredit, financial service like we have discussed, like insurance, saving, remittance, and provided, all over things are provided over here. And somewhere the people are also helping the rural areas people with proper training, counseling, supporting, like how you can utilize this money in the better development of the activities. So these non-financial services are also provided under these things. Some banks are providing the knowledge regarding the services to the people of the villages, those who are not those who don't know proper, like how this mobile phone works, how we can use the apps for transferring money and all those things. So training, counseling, supporting, and explaining various type of government things that have been there in the market. So explaining all these things to those people. So all these things are working over there. So some of the thought that provoking facts on microfinancing. As we all know that right now everybody is using mobile phone. Everybody is using mobile phone. It is seen that mobile phones are increasingly being used as a banking channel. Every bank has their app on that. That means you don't have to even open your laptop also. Okay. Right now you just open the app in your mobile phone, you transfer the money, even you can buy your shares and whatever you want. You can open any bank account, any kind of government service you wanted, you can have it on a mobile phone. Okay, being used banking channel in the microfinance market, while it is making headway on countries like our USA, Canada, Kenya, and then mobile phone have not yet found popularity as a banking channel in the remote areas of India. Still there is a very remote places in India where the proper financial institution has not been reached, and even the proper mobile connectivity internet facility is not there, so they are not able to utilize that facility in a proper way. But still it has reached through a most part of our India, and the people are utilizing it in a proper way. Okay, normally who are the major borrowers? Women are the major borrowers in that area, and most of these women reside in the rural part as well. As you all know that even in the rural urban areas, women are the major part who are using the microfinances for their work. The India microfinance industries have been growing faster and faster as compared to other developing nation like Bangladesh, Vietnam, Peru, and various other nations are there. Okay, microfinance loans have a high repayment rate. This is clearly proof of the effectiveness. That means people are repaying their loan what they have taken. That means even the small loan they have taken, they have worked on it, they have generated the profit out of it, and they are repaying their loan back to the microfinance institution. So this clearly shows the effectiveness of the concept of microfinancing. Very important. It shows that there is a huge effectiveness regarding this concept. Now, some of the schemes that has been run by our government, like microfinancial scheme, NBCFDC, that is National Backward Class Financial and Development Corporation, is implementing SCA, that is a Special Central Assistance, through aggregate NGOs and self-help groups. So they have they have maximum loan limit has been rupees 50,000 rupees, and interest rate is 5% per annum. Then we have a Mahila Samriddhi Yojana, microfinance schemes for the women especially. So it is implemented by SCA through NGOs and all those things. So the maximum loan limit is rupees 50,000 over here. Then Krishi Sampada, this provide concessional loan to under microfinance to small farmers, vegetable vendors, and the target group for requirement of the funds during the Rabi and the Kharif crops. So the loan amount is up to rupees 50,000 at rupees 4% per annum, because here government is providing subsidies on the loan. Subsidy on the loan has been provided. That means if you are paying your loan on a proper time, then government is bearing some part of your interest rate. Okay, normally the interest rate is around 6 to 7%, but around if you are paying at a proper time, maybe 3 to 3.5% interest has been given by the government, and you have to pay less interest. Okay. Now, some of the benefits of microfinances, like the World Bank has already estimated that 500 million people have directly or indirectly benefited from the microfinance related operation. The Consultative Group to Assess the Poor, a Washington-based global non-profit organization, has estimated that in 2021, more than 120 million people have directly benefited from microfinance related operation. As you all know that during this 2021, it was a COVID-19 situation, and you all know that the in-hand cash has been reduced from the people. Now they will be requiring some kind of small cashes in order to form some day-to-day activities properly. Okay, so that is why 120 million people have directly benefited from the microfinance related operation. However, these operations are only available to some of the world poor, while there is estimated 1.7 billion people who still lacks to establish basic financial account. Okay, so it is like from the world we are talking about, like still 1.7 billion people are there in the world who do not have a proper access, or they don't even have a proper bank account to run, right? So some of the benefits of the microfinance are like no collateral requirement is there. It helps in increase economic activity and income. It saves and invests in the future. It guards against any kind of emergency. That means if you have any kind of emergency or shock has been come to you, then you can easily get it money from the microfinance institution. It helps in better invest in health, nutrition, and education. It provides generate employment. That means if you are an entrepreneur, and if you wanted to open some kind of enterprises, then you will keep some people to work with you, so it generates the employment also. It facilitates the rural employment, generates an earn income. So these are some of the benefits of microfinances. Okay, so the benefit of microfinance extend beyond the direct effect of the given people of the source of capital. Entrepreneurs who create successful business in turn create the jobs, trades, and overall economic provide. So entrepreneurs who are getting money through microfinancing, if their business is running properly, they will create jobs, they will trade well, then there will be an overall economic improvement of our community, including the communities where they are working. Then obviously if some advantages are there, so there will be some criticism also will be related to all these things. So what can be the criticism? There will be a proliferation of microfinance organization. That means at a single place too many of microfinance organization have come and they are competing with each other. Yes, that is a good practice, but sometimes it leads to the monopolistic situation also. Okay, then there are lack of guiding principles are not there. Strict standards to ensure protection of clients are not properly there. There is no umbrella organization to certify the best practice. That means you there is no thing which shows that what best practice you have to follow, what is the best practice, because this area is not totally under the control of any of the institutions. So here there is a scope of fraud is always there. Okay, and creating a creation of too many competing business to allow all to flourish, creation of too many competing businesses at the same time to allow all to flourish. So sometimes if you just providing loans to the same type of organization in the same place, then they will be compete with each other and they will automatically hurt each and other. Now now we have reached to our last hour session, and what we have read about our microfinances is that this microfinances has helped too many poor peoples in a wide range of financial services. And microfinancing is important to elevate the poverty from our country because it provided smaller loans and people to understand the poverty and try to reduce the poverty, which looks beyond low income to the vulnerability and powerlessness. People providing microfinances can give poor people a mean to protect their livelihood against any kind of shock that is happening, like all of a sudden some shock has happened, if some earthquake has happened, if their house is on fire, or anything, anything can come. Okay, natural disaster or anything, microfinances provide like a cushion to all these people. Okay, and even they diversify the things over there, like means if people wanted to open different type of businesses over there, so they provide the loans to these people, they can open the loans over there, and the people generate the entrepreneurship activities from there, they get the people on the jobs will be created, then trade will be done, and then country will progress because it will bring too much of uh, benefit for our country. Okay, guys, so this is the last of our session. If any question is there, please ask me. Any question is there, please ask me right away. I am here. Anybody? Anybody has any questions? Just let me know if anybody has any questions, then I will just. Okay, then we will be meeting you at 9 p.m. today, guys. 9 p.m. again, we have a session. Today we will be having the 58th session, and today we will be discussing one important theory that will be important for your exam point of view. And see you at 9 p.m. again, guys. See, Lalit, the regulator normally the regulator is not the ministry. Normally, the regulator will be your RBI or your SIDBI or your Nabard. Okay. Normally, all these institutions related to microfinance or anything, they are normally regulated through a RBI. Okay, and sometimes this regulation is being delegated to other institutions also. Okay, normally all the related anything related to finances or anything comes under Ministry of Finance only. Okay, so ministry normal ministry do not act as a regulator. Regulator is a institution which has been created altogether in a different way. Like your RBI has been created, your SIDBI is there, your SEBI is there. Nabard is there, right? They are providing the loans also, they are regulating that also, right? So it is like that. Okay, I hope you got it. Okay, guys, then see you at 9 p.m. And at the last, please never forget to like, subscribe, and follow. Happy learning, guys. See you at 9 p.m. again. Thank you so much for listening to me. Bye bye, take care, and see you at 9 p.m.